Hello everyone, this is Juan Sarmiento and today is Friday, September the 10th. I have been looking at three possible, maybe Netflix. I don't know if we traded like before. Netflix, we'll look into that as well. Okay, let's go to Netflix, all right, and then I'll show you how I do it. Okay, Netflix right here. Okay, first thing is to look for a suitable trade. And this is what we do. Go to the trade tab, enter Netflix. Take a look at the chart. It's always useful. You can see how it is a big mover, to say the least, and that took place after they moved strongly, and you can see that the estimate was more than the actual, but then the stock began to take off. You would have to look at the news and see how come after earnings the stock went down or sideways and then suddenly pick up. Here on the 8th, on the 19th of August, something happened that the stock rallied. We don't care much about it. All we need to know is it at a low volatility range, and is it hitting new highs? So you can see it is. Is it going to continue on, or is it going to reverse and go down? That's a big thing. Okay. You can take a look at live news and scroll down to August the 19th. You might not see anything there, but there might have been some piece of news. We can't really go that far back, so it's a little too late for that. So we rely on the movement and the technical analysis stuff, the technical options analysis. So let's go to the trade tab, and what would we select? Well, we need to go for the back month, more than 90 days. So we could pick September the 17th here, and you can press the control key and then click on the call options that you want to trade. Something very close to the money. The stock is trading at 600, so well, we have a 600. So we click on the ask here once. It's not enough, so you need to press the control key and once again to get a second two calls, and we're going to do the same for the puts, keeping that control key pressed. Click on the ask twice, and now you got a back month, two back month straddles. Now we need a front month. Well, it could be 28 days, that's fine. 35 would be fine too. Let's do 28. Okay, press the control key, and again same strike price, this time only once on the bid side, because we are selling that. Bid, same on the put side, bid, and that's fantastic. So let's analyze that, and that is our trade. Okay, first take a look at the volatility skew. Well, that doesn't look very good, does it? You can let's say copy this. Okay, copy that trade, and you can paste it in your spreadsheet. The price is 116. That seems like a little too much because it's beyond our range, so that won't work. Okay, I'm ruling it out already. I'm not going to spend any more than 10% of my account, and our account is around $87,000 right now. But just for the exercise, let's go to the options here. Down here is the volatility skew. You're going to put the front month options here, back month rather, 30.75 for the calls and 30.06 for the puts, and then front month 25.52, 24.94. In case you wonder, it's right here where you have it on this side. Okay, pay attention here. That's where they are. That's the volatility skew. You enter it there, and it says minus 8.325. I'm looking for a maximum difference of. Wait a minute. I misentered that. 30. Yeah. 5. Still too much. 5 percentage points over 3, that should be the maximum. So it says do not trade. The earnings says do not trade as well because it's negative, but supposedly there was some kind of news that I don't have in hand right now. So now you have 2 strikes against this trade. Liquidity, okay, we know already it's too expensive for us, but the liquidity comes from the mid minus natural. So the mid is 11693 and the natural is 121.4, difference of 3.7. I'm looking for a maximum of 3%, so there is a little volatility skew issue. And then the current IV percentile, you just go over here, trade tab, scroll down, and where it says today's options, current IV percentile 15%. So it is okay as far as the volatility is not too high for this particular stock. But that's the only thing we have to trade, to do the trade for. So forget about Netflix. Let's go to Lulu, which reported earnings and jumped. So let's go to Lulu here. So I copied the trade in the same way, so we can bring it back. Copy it from your spreadsheet, and you can paste it here using this little icon here. Oops, that's not what I meant. This one here. There it is. So I copied it, and let's analyze that. Analyze that trade. Okay, and here we have looks like the volatility skew is too bad as well. Okay, I have done this, so let's go to the spreadsheet. Here you see it's the same trade, so October the 8th versus December the 17th. Okay, the strike price is 420, and so my price is 82.98. So we could do one, because one Gini trade, because it's close to, let's put 83.05, and that's 10% of my account. So I could do that. Let's look at the earnings. Go to the chart. That's the easiest way. And here we have the information we need. Estimate was 1.25. The actual was 1.65. So a big earnings beat. And here you have it. It's 36% earnings beat. So that's good. All right. The volatility skew, we do the same. Go to the analyze back. And here you have it. It's a little too high. Okay. 26.15, something like that. It was just a few minutes ago. Yeah. And so it says do not trade because it's close to 5%. It should be 3% difference between the front month options volatility and the back month options volatility. It's higher in the back month, and those are the ones we are buying, so it becomes too expensive. That's the rationale here. Okay, the mid is 82.58, and the natural, well, all you have to do is say create duplicate order, and here's the natural, 85.25. Go back to my Excel spreadsheet. 85.15 is really numbers spreadsheet. Okay, and the current IV percentile, again, go to the trade tab, scroll down, is IV percentile is 34. It's a little too high, way too high actually. That means that for this stock the volatility is a little high right now. Okay, and it should be declining as days go by, unless we get some other important piece of news or something. Then it could go up or down. I would anticipate it will go down, could go as low as 15% here like it did before. Okay, so that looks good, but I wouldn't trade it. You can see it's got 1, 2, 3, 4, 3 strikes. 3 strikes, you're out. Okay, so sometimes even 2 and 2 I might consider it, but not this. I can't trade it. We might trade it. We can try it again in a few days. Okay, and then I had Apple considered too. We have an Apple trade. Nvidia is the one that we should be looking at. So let me copy that, put it here, paste it, analyze it, and here's our trade. The strike price is 225. The stock is trading at 223.72, so it's very close. Okay, I'm selling the October 15th and then buying the December the 17th. The price is 49.45. Okay, that looks close. Let's see. Okay, first of all, the IV percentiles, the volatility skew here. 37.6, 36.57, 34.91, 34.53. You can see that down here, okay? On your bottom right corner, that's where they are. And that is 2.365. That's less than 3. We're happy with that. Let's look at the chart. Looks like the volatility is in the lower end. The stock has been rallying. It's at 52-week high. The earnings was an earnings beat, 84 cents versus 104, 85 cents. 104. Yes, that's a 22.9% beat. That's very good. That says trade for the volatility skew. Let's see the liquidity. Let's go to the Analyze tab. Create duplicate, and there's my liquidity, 49.45 versus 50.2. Yeah, that's definitely acceptable. Let's enter exactly what we have, 49.48 versus 50.2, 1.4%. And then the current IV percentile is 23. Let's go to the trade tab. Let's confirm that, and 23%. That's a little high, but not by much. It's at the lower end, so we're not going to get a volatility crush, I don't think. Okay, so we have 3 out of 4 are good to go. Okay, and especially the earnings. If the earnings are really good, you're motivated to enter this trade. And I'm going to enter it then. Let's go to the Analyze tab. Okay, could we do 2 of them perhaps? Let's go to our chart here. 49.45 times 200. I'm entering the data here at the top left corner in case it's hard to see. Okay, 98, that's a little too high, so we can definitely do 1. Okay, so let's do that. Confirm and send. Okay, and it should be coming anytime now. Let's examine the trades as we have them, organize them by, okay, Apple first. We have October, January. Yeah, plenty of time to see that work. Let's go to HCA, October. Yeah, no need to change anything on that. What I'm looking for is it less than a week to expiration or close to a week to expiration? And we can see here, no, you have 28. It's recently we entered that, or we recently rolled that over. Low, let's look at the risk profile. We are right here. A little decline here wouldn't hurt us too badly. September the 24th, how many days to expiration? 14. So we are not in a hurry. Next week we will deal with that. MS. Okay, here's the interesting fact here. I did a rollover on the call side, The put I left alone, and now you can see that the short call expires in October, but the put here is expiring today, and you can see that it's trading at 103. So this is going to expire worthless. So we can add as many puts for the same date as the calls. Let's just create a copy here, invert it, and now we put here October the 8th. And you might say, how come you're selling? Well, now this time I'm selling 4, and I had already 4, so that adds up to 8, and I have 8 long puts, and this is going to go away this afternoon. So at 4 o'clock Eastern time, 4:30, no, 4 o'clock, and this is what the trade would look like. Okay, we don't want it to look like that, because that means infinite potential losses to the downside, or close to that, you know, too large. But because this September 10th goes away today, this is what it will look like, and that looks great because the delta is still positive. Right now the delta is high, and so selling that would be okay. How about if we sold only 3? Because let's say we think that the delta is too high, the stock might decline from here. Yeah, I think it might. So we could sell 1 or just 2, and then it would look like this, close to delta neutral. Even if you only sold 1, it would be delta neutral. Okay? Let's sell 2. I think that would be fair. A low delta, but if the stock rallies, then our delta is positive. So let's do that. So what you just saw is I can leave that put because it's so out of the money. You can leave it until the expiration day, and then you add the additional put, 1 or 2, for the next series, the next short series, which is October. Okay, you can do that anytime. Not anytime, just on the day of expiration. Okay, be careful not to sell too many puts, all right? Because then you want a delta neutral trade. Okay, let's go to Nike here. Okay, October, you can see here we have 175 is my call. Okay, let's take a look at the chart. Okay, earnings are coming up, and we want it to be delta neutral. It is very close to delta neutrality, so I'm not going to change anything. I might close just before earnings if I'm convinced that I have plenty of earnings, plenty of gains there. Let's look at Nvidia. It's still waiting for that trade. Let's modify the entry price. Yeah, it's a little higher, so cancel, replace, unlock it, and lock again, so that this is the mid price. Confirm and send, and keep on changing until it gets filled. For the rest of the day, we'll keep on doing that. Yum. Let's take a look at the chart of Yum. It's perhaps trying to bottom out here. It might, if it does, it might go to a new high. Let's analyze that. October 1st is the next expiration. That looks fine to me. No need to worry to anything. And that's all there is to it. We just wait for that Nvidia to fill, and I'm going to keep changing it until it gets filled sometime today. Cancel, replace, unlock, lock again, and confirm and send. And that changed it, increased my price just a bit, or you can increase somewhere in the middle. Oh, no need to change it, it just got filled. Okay, that's all there is to it. Thank you very much for joining me, and I'll see you next time. Bye-bye.